But first, though, of course, let's get to our market panel. Sam Stovall of CFRA Research and Barbara Doran of BD8 Capital Partners. Happy Thursday, guys. Sam, so October is historic.
Friday Eve, John. Friday Eve.
Friday Eve. Looking forward to it. It's in a way better than Friday. Anticipation. October is historically volatile. Oil spike. We've got that on Israel retaliation expectations. China spike on stimulus. Should investors take these as the exception that proves the rule of demand weakness, or maybe a sign that pessimism on energy and on China was overdone?
Well, I think, first off, that you're right about October. It has 34% more volatility on average than the other 11 months of the year. And typically, October before an election is usually in negative territory. I think that we've had the negativism in China, and the real question is whether the stimulus is going to work. Right now, seems as if some of that hype is fading at this point. And yes, there is very big concerns about energy because of what we cannot do about it, and that there is a likelihood that there will be a response by Israel on Iran, and that certainly could push up oil prices, but they have remained pretty quiet, in my opinion.
Okay, so Barb, jobs report tomorrow. It seems you expect that it's going to continue this narrative of solid job growth overall, justifying a quarter point cut next. I think consensus is 148,000. Is there more market action likely if it's a little high or a little low?
Well, it's a good question, John, because we hadn't had so many good data points this week. I would say if it was a disappointing number, it could have an impact, because I think people are still, Powell had indicated earlier this week, 25 BIP cut in November, 25 in December, if the economic scenario they are picturing unfolds. But this week we had, today alone, jobless claims and continuing claims pretty much in line, a little bit higher than expected. You had the ISM service numbers, which were much higher in terms of business activity and new orders, showing robust economic growth. You had the JOLTS number, which is the ratio of job openings to people looking, and the job openings were higher than the last time. And of course, the ADP number, which is correlated somewhat with tomorrow's number. It's private payroll, but even that was better than expected. So it would be a surprise if it was negative. But if it is negative, I think that the market will take it in stride. You look what the market market could be down on the week at this point, but it's absorbing, as we just talked about, what's happening in the Middle East with Israel and Iran and the threat to oil there, plus the port shutdown. The walkout there. And that, by some estimates, could cost 0.3% GDP for every week there's a shutdown.
Yeah. So
I think that the market is holding in here. I think the number tomorrow is important, but I don't think it will have a big impact. And I'd also be very surprised if it's not a good number.
Yeah. There's a lot for investors to digest here, Sam, not to mention the fact that seasonally it tends to be a weak time of the year. We call it so-called Red October. You just touched on election volatility. But to go back to something you just said, at least in the near term, given the geopolitical situation, are equities taking their cue from oil?
I think that they are taking their cue from oil, because right now it's not spiking. The feeling is that if Iran's oil production and transportation facilities do get hit by Israel, then you could see a very sharp spike moving up to $100 plus. But right now, just because of there's a threat out there, the concern or the feeling is that cooler heads will end up prevailing. So that's why we've really only seen about a 4 to 7% increase in prices on both WTI and Brent. And with it hovering below that $80 per barrel level, I think that's causing investors to feel a bit unnerved, not unnerved, but, calm about it all.
Yeah, and energy was the best performing sector in the S&P 500 bar, but tech right behind it. And actually, the NASDAQ saw a little bit of buying here into the close. It basically closed right below the flat line here. We talked about the pop at the top of the hour we saw in NVIDIA, but is tech the trade right now, especially when you do talk about some of these mega cap names, or does the rotation continue?
Yeah, it's another interesting question, because we're going to heading into earnings season starting in a few weeks, and the mega cap tech a lot have underperformed over this last few months, as the market has broadened out with the prospect of the Fed beginning its easing cycle and with more to come. So I think when we start to see these earnings, people will refocus on big tech and look at their earnings and look at the growth and the underlying secular stories, and I think they could catch a bid. And so I think you look at what happened with NVIDIA, as we chatted about. That is really just coming out and reminding people, there is big demand out there, and it's not over yet. So I think that could very likely happen, and you could see them catch a bid and at least for a little bit hold the leadership position in the market.